Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold.
ICE Brent crude oil futures. A fifth bullish white soldier yesterday and a continuing follow-on higher to the recent two-day bullish descending hawk pattern, where it acted, as past data indicates, as a continuation pattern rather than what is traditionally seen as a reversal pattern. It is also the fourth consecutive close over the 50% Fibonacci line of the September to December 2023 move at 84.99, which is now support. Additionally, the market closed for a second consecutive time over the October 2018 high at 86.67 and tested but did not close over, rather closed on the 50% Fibonacci line of the November 2020 to March 22 move at 87.41. Further up is the lesser Fibonacci line at 87.99 and a dark blue highlighted neckline currently at 89.01 of the mid-July to early November 2023 head and shoulders top. Meanwhile, looking below, we have a recent condensed bullish halfway hesitation pattern between approximately the recent 38.2% Fibonacci line at 82 even and the 84 area overhead. Overall, we still have two patterns influencing this market. We have the original early November 2023 to late January 2024 reverse head and shoulders pattern with a bright green neckline that's well below the market, currently at 71 3/4. And we also have the newer mid-December 2023 to date bull channel, highlighted in bright red on my daily chart, currently at 80.43 to 89.76. The latter pattern is in the ascendancy right now. Now, given the recent patterns, I felt obliged recently to lay out some potential top sides for some of these patterns. Thus, for the bullish halfway hesitation, we have a target X in the 89 even area. And for the November 2023 to January 2024 reverse head and shoulders pattern, we had a primary target in the 84.70 area, which has already been reached, and a secondary hard reach target X1 in the 87.85 area, which we are not too far away from now. Now, so far today, a reactionary open lower, capped by the 50% Fibonacci line at 87.41 and testing down and somewhat through the October 2018 high at 86.67. Spot gold. A counter to the counter bearish harami yesterday that was also an indecisive spinning top, coming as it did after the previous session's immediate countering bullish thrusting and bullish double patterns. Prices for a second session initially dipped down through the extension of the broken upper trend line, currently at 21.53, which is highlighted in dark blue on my daily chart. This is from the mid-August to mid-December 2023 ascending wedge pattern before moving back up and being halted and closing under the very recent March-based downtrend, currently at 21.59. Meanwhile, below the dark blue extension, we have the first 50% projected Fibonacci line I had previously drawn at 21.41, as well as the November 2023 high at 21.35, and then the 38.2% projected Fibonacci line at 21.28 before nothing much until the neckline currently at 21.01 of the October 2023 to January 2024 lopsided head and shoulders continuation pattern. And I have my doubts about this last one. Meanwhile, beyond the recent downtrend, the market is still capped by the 100% projected Fibonacci line at 21.93, despite it being penetrated. I recently put forward the idea that the move higher over late February to early March is part of a very large bullish halfway hesitation. So if we took the action since about December last year through to February this year as the actual halfway hesitation, then we'd have the first leg up from October to early December 2023, and the action this March becomes the second leg up. This could give a potential target X overhead up well off the top of my daily chart in the 22.65 area. Very high up, but something to consider nevertheless. Before then, the next 100% projected Fibonacci line is at 21.93, and the next 50% projected Fibonacci line is at 22.17. The nearest Gann number is at 21.51, and the nearest compound Gann number is at 21.87. Finally, we have this small descending triangle formed over the last 2 weeks or so to watch out for, though it may may mutate to a descending wedge pattern, so watch this space. So far today, a test up to the new downtrend, but seeming immediate rejection, with prices getting squished between this downtrend and the dark blue extension. Something looks like it may have to give, and soon, so watch out for any fallout and shrapnel from that move.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.